In the history of cryptocurrencies, there have been moments that delineate periods and distinguish the past from the future. There are times when narrative, utility, belief, and conviction all come together so completely that a new framework is created. One of those times is today. Since GCR, the mysterious whale known for his uncanny accuracy, broke his quiet, the community is in a frenzy. He uploaded a single chart to a private encrypted channel that was only accessible by insiders. That graph lays out XRP's trajectory towards a $10 trillion market valuation. The price objective that accompanies that cap will shiver skeptics, frighten doubters, and heighten optimism. $100,000 for each XRP. Those who viewed the chart also stated that this is a forecast rather than conjecture. A caution. For those who think the next institutional deluge is unavoidable, here is an appeal. GCR is who? You have to grasp the significance of what he said in order to see why this matters. Known by various names, including Giant Rebirth, GCR Classic, or just the Whale, GCR began modestly, transformed early meme coin plays into legendary wins known as big macro events before nearly anybody else, and frequently disappeared as soon as markets reset. His earlier forecasts included bear cycles, cryptocurrency washouts, and the 2022 crash. They weren't merely conjectures. These signals were derived from institutional rumors, market structure, flow, insider knowledge, and regulatory undercurrents. His track record lends him credibility, as you are aware. When GCR talks, billions of dollars pay attention. As a result, many people viewed the chart as a realistic projection rather than wishful thinking when it first emerged. Let's examine the chart. It displays multiple stages of development. Current conditions are covered in the first phase, which is called accumulation. Smart money is accumulating positions covertly, with regulatory pressure growing but not yet reaching a definitive conclusion. Aligning with the impending institutional inflows is the main goal of the second stage, which is referred to as catalyst activation. We are discussing changes in reserve allocations by hedge funds, corporate treasuries, and even sovereign wealth funds. It's possible that banks may begin incorporating XRP into their cross-border settlement systems. In the third stage, known as the volume spike, exponential usage begins to take off. Consider finance rails, IoT micropayments, and remittance flows. Additionally, XRPL on ramps for international trade is anticipated to be important. The market capitalization is then expressed in trillions, and at the end, the estimated market value is a whopping $10 trillion. Isn't that quite a journey? After accounting for staking, institutional lockups, and development team holdings that remain immobile, the price per unit is estimated to be close to $100,000 when divided by the fully circulating or weekly locked supply. What then lends credence to this vision? Well, a number of threads are already accessible. There has been a steady increase in institutional interest in XRP. This is influenced by partnerships, clear regulations, compliance tools, and improvements to XRPL in terms of speed, efficiency, and features like hooks, escrow, and interoperability. Businesses are asking for XRPL connections, while developers are expanding on XRP. Pilot programs for trade settlement and central bank digital currency experiments are currently being discussed. In contrast, non-sovereign digital assets are actually favored by macroeconomic conditions. We're discussing issues like inflation, currency devaluation, and excessive dependence on expanding the money supply, and, of course, geopolitical danger. These days, institutions are actively searching for alternatives and hedging. The qualities of XRP, quick settlement, inexpensive price, reliable protocol, and a strong ledger, certainly made it a topic of discussion. Such projections, however, require careful examination. There are actual risk factors. Risk to liquidity. Institutions will want substantial liquidity to prevent slippage even if they want XRP. If regulatory risk jurisdictions believe that reserve or institutional use poses a danger to monetary sovereignty, they may prohibit or strictly control the adoption of digital assets. Therefore, even if XRPL has demonstrated that it can scale up to trillions of dollars in value while managing daily global flows, guaranteeing custodian readiness, and upholding auditability, each of these components must be robust when discussing technological risk. Then there's the risk of perception, isn't it? Trust could be severely harmed by macro shocks, unfavorable media coverage, a hack or exploit, or even legal crackdowns. Another significant element is market psychology. A correction is probable if the price increases too quickly without the infrastructure or actual utility to support it. However, many of these risks are already acknowledged in GCR's prediction. In addition to overlay scenarios where adoption lags, regulation slows things down, or economic shocks temporarily drive the markets lower, the chart also incorporates buffer zones and stress testing. Nevertheless, it rides that wave of institutional deluge and ends up with $100,000. GCR has highlighted a few fundamental ideas in interviews and previous forums that enable him to see farther than many others. 1. Flow is important. Big deals, accumulation of addresses, insider movements, OTC directives. These leave hints. 2. If handled properly, regulation can provide institutional comfort and legitimacy. It is not always a burden. Third, story anchors are valuable because they give individuals hope that anything is possible. The more traders, institutions, regulators, and the media discuss XRP as infrastructure or a utility, the more ingrained that notion gets. 4. Transparency in custody compliance and risk mitigation are necessary. To be honest, institutional funds remain in the background in the absence of these. What does this actually imply to you as a viewer? Positioning comes first. Now is not late, as bulls say, if you think GCR's projection is accurate. In actuality, the institutional cycle is only getting started. Thus, accumulating that goes unnoticed becomes essential. You know that knowing your regulatory exposure is crucial, and you truly want to use secure custody. Await announcements, partnerships, endorsements, and improvements to the infrastructure. The road from the current price to $100,000 won't be a straight line, so just be ready for market volatility. This is not financial advice. Rather, it is a speculative tale. Always conduct your own research, weigh the risks, and seek advice from experts.